Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
Now, our presentation today is about using candlestick charting and combining with pivot analysis. Most people are familiar with candlestick analysis. If I could just ask you to type a Y, who uses candlestick analysis in their everyday trading? If you want to just hit Y for yes or N for no, just so I can get an idea of, who's using candlesticks and who's not. All right, so we have a bunch of people using candlestick analysis. Great. And if, for me, what I like to talk about when I deal with candlesticks is not the 70-some-odd patterns and the maybe 30-odd derivatives of certain patterns. So I like to talk about the relationship of the four common denominators that we all have equal access to. And those four common denominators are simply the open, the high, the low, and the close. And with candlesticks, they really do help illuminate the price pressures as a momentum indicator. There's no better indicator out there than using individual price bars or candlesticks to help us identify bullish or bearish momentum. What I like to look at is the close relationship against past and current price action. And when I define price action, folks, I'm talking about open, high, low, closes, past and current. So let's talk about past and current. If the market, as you can see our first chart, the market closes above the open. Now, for most people, that close-open relationship, they may take that a little bit for granted, but it's very important that when you see bull markets, normally we look at formations where we see the open close, where the market will, on your charts, most likely be a green-colored candle, where the close is greater than the open. Most bull markets, you'll see open lower, and then at the end of the day, trade higher or close higher than the open. I like to see for a continued strength in the market, in a bullish market environment, most people that I poll will say, a bull trend means higher highs and higher lows. And while that's true, there's a better and more accurate definition, which I'm going to give you right now. First off, I like to see the close greater than the open. So besides a higher high and a higher low relationship, I like to see close greater than open. So there's 3 points of interest that help me define the condition of the trend. Not that we're in an uptrend, but what's the condition? Is it strong, or is that trend starting to weaken? And looking at the open-close relationship and looking at the close to past prior points of interest can really help define the strength or weakness of the bull trend. In addition to closes greater than open, I like to see if the close is at or near the current bar's high. That'll tell me that it's maintaining its positive growth rate or its positive momentum. And finally, I like to see if the close is higher than past or prior highs. That's really a key clue as to telling me if there's a continued bullish momentum, or it increases the odds, or the higher the probability is that if we close above past or prior highs, the odds favor that we are going to continue that bullish momentum to the next or several few sessions later. So those are my 5 key elements to identifying bullish momentum. The hollow candle, or the white candle, the white real body, it also lets me define the range of the not just overall length of the candle, but that real body relationship. That real body relationship is important to uncovering a few candle patterns, such as engulfing patterns. It also helps me to identify, if using confirming indicators, folks, like a moving average. I don't like to just see the close of a market above a moving average to tell me that we're in a bullish turn. I like to see the entire range of the real body above a moving average. So if you're using a moving average setting as confirmation or one of the confirmation tools in your charting or trade to make your trade decisions, a lot of times you'll see a moving average relationship where in an uptrend, the moving average acts as support and hugs the lows. But then all of a sudden, when you see a reversal and the market closes below the moving average, people start to panic and freak. Well, truthfully, I like to look to see if there are multiple closes below a moving average or if the entire range of the real body, the open-close relationship, is beneath the moving average value, not just the close. So that's, if I could just teach you that right now, and then you can visualize it in the next few slides. It's an important element in using candles, not just for the patterns that many of candlesticks represent, but it's the how to visualize the momentum on an individual candle that is important, and I think that's one of the things that is often missed by many traders. On the right side, we have a negative close or a bearish candle, which signifies pure and simple that the market closes below the open. And so for me to understand if the market really truly is in a downtrend or a bearish market condition, many people also would say, hey, John, looking at lower highs and lower lows and looking at lower high, lower low patterns helps me to identify that the market condition or there's a downtrend or it's a bearish market and it's intact. For me, I like to look at a little bit more than just lower highs and lower lows. I like to look at closes less than the open, and I like to see longer ranged open-close relationships. So we have a longer ranged real body. That really tells me that there's more negative momentum in the market. In addition to that, I like to see if the market closes closer to the lows. That really does tell me that the market sold off and the market maintained its negative or its bearish momentum into the close, and therefore it's probably going to carry that negative momentum into the next session or so. In addition to that, folks, I also like to pay attention to where the market closes in its current bar versus past or prior lows. If we close below past or prior lows, it pretty much signifies that not only are we closing below prior closes, but man, we're closing below prior support values. When you close below a prior low, that low maintains support for a time being. When you take that out and you close below that old low, you are now increasing the probabilities that there's further negative momentum or there's still bearish negative momentum carried into the marketplace. So it's important to pay attention to the open, high, low, close relationship, and candle patterns for me really help illuminate that a little bit better and more accurately than other indicators. So in looking at your candle patterns, you will probably see a green-colored candle will be a higher close than open, and a red-colored candle will show a close lower than the current bar's open. And so when you're looking at candlestick patterns, that's probably what you're seeing on your charts right now.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.